Good morning, December the 17th, 2015. Time to kick off another trading day. Today's going to be a very interesting day because yesterday, going into the FOMC announcement, everybody expected a increase in 25 basis points, basically to save face by the Fed, with a dovish statement. And we got the 25 basis point increase. We did not get the dovish statement. The Fed showed 4 interest rate increases for 2016 with their Fed funds rate projected at 1.6% by the year's end. And overnight, stocks around the globe are up a bunch. We were up a bunch yesterday afternoon. Treasuries are holding yesterday's gains. Come back from yesterday's low close. And commodities are lower. The dollar's strong. The euro is lower, so that's in line. The yen is lower. The dollar is strong because of the interest rate differential. That makes sense. Commodity prices for raw materials are lower because of a contracting world's economy. That makes sense. Treasuries are holding and come back from yesterday's sell-off into the close because of the strength in the stock market. So something's got to give today. It's hard to see both treasuries and the E-mini trading higher in a sustained rally. Now, I understand relief rallies, and we may be seeing some of that in treasuries. I understand the stock market is higher because the Fed wants it higher, and we have seasonals, and so we're in a situation where stocks can make new highs before the year end just based on seasonals. Can, not will. So my guess is that it'll all hinge today, as far as treasuries are concerned, on what the E-mini does. Okay, pretty easy to see in the 10-year that resistance starts at 4, and we have yesterday's high at 11. So 8 to 12 is best resistance. 4, given the overnight session high and yesterday's high is the 5.5. Is the first start of it. So our first sell is 3 to 7, then 11 to 15. And I think if the E-mini rallies, we'll get to see the short side of this market develop. On the buy side, support begins at 28, but definitely at 24. So we're going to put a question mark at 28. Just playing for a trading range as people kind of think through what's going on. Buy 1 will be 21 to 25, and buy 2 will be 13 to 17. Okay, we do have some news today. It's not the market moving type. Jobless claims, 270, that's the new default. Philly Fed, I've seen it as high as +2, but plus 1.2. Not a very big number if you think about it. Current account, minus 119B. You know, everybody says we've got a deficit of 400 or 500 billion. It's a lie. We've got a deficit of over $1 trillion, and we're pumping that out every year. They cook the books. They do everything. Smoke and mirrors. They live. They promulgate. They start the lie, and then they expect us to live it. I mean, what can you trust that comes out of any government agency's mouth anymore? Nothing. And it's like the old Aesop's fable, you know, the boy that cried wolf. You do it long enough, pretty soon nobody believes you. And I think the bureaucracy, I think the administration, I think the mainstream media, we all just sit back and look at it with a very jaundiced eye, kind of reminiscent of what happened with Pravda and Izvestia back in the old days. You have to read between the lines and see what it is. So we do have news today that can shake things up. First thing out will be jobless claims. Nobody cares about the amount of money that's being printed. Second will be Philly Fed. But I think the primary determinant today will be the direction of the E-mini. The E-mini can fail at 2075, 2080. If that's the case, we should trade higher. If the E-mini continues to rally, my guess is we're going to be lower. So today's kind of one of those days we'll just kind of feel our way in and see if we get the expected and normal reactions. And we've had 6 years of low interest rates, 7 years. This is the first rate increase. It's either 9 or 11 years. So we're going to get to see what happens after a Fed rate increase. I can tell you what happened back in the old days after Fed interest rate. The first interest rate increase would take the stock market higher because it was the only place left to play as far as the money was concerned, and the treasuries would be lower. And so we get to see in this manipulated market where the Fed's all over the map, supporting all the markets and trying to get their way, and they have been able to get their way, how that impacts the trading. Hard to say. I think probably the most consistent thing that we've had to deal with, higher stock market, lower treasuries. Looking at where resistance begins, 24, 28, so 23, 27, it's pretty aggressive. If we get through that, you can see that the spill came out of the 56.16 area. The low volume number's up at 10, so if we make it through the buck, 7 to 11, sell 2. On the buy side, we've got the London low at 04. We had the breakout in London at 13. We're at 19, so 9 to 13 is going to be buy 1, and that's close, followed by 29 to 01 for buy 2. And my guess is if the E-mini rallies, the treasuries will be lower. Something's got to give. Okay, gold was low overnight. We left yesterday's market saying we still like the short side of the market better. And pretty good selling above 75. You know, we've gone from an 80 to 85 resistance. Now it looks like resistance is 75 to 80. We've had pretty good support at 60 to 65. Again, we had support at 60. We've got a B. The market is pointed lower, so I don't think the bottom falls out of the market given all the... I mean, every place you look is filled with dread, chaos, or doubt. So while I do believe gold is selling, I don't think the bottom falls out of the market unless some big central bank comes in and whacks it. Okay, 69 to 71 on the sell side. Then 74, 76, sell 2. Okay, the euro is lower as we anticipated. 108.50 is the best support or near support. It could be at 109 at the close of biz yesterday. And why is the euro lower? Well, the dollar is stronger. That would be expected. We haven't quite made our 108.50 back over here. You can see the low volume number is at 835. So we're at 84. We're going to put first support at 40 to 50. And then 108 even, 108.10. Goldman is still sticking with their 2016 forecast of the euro below par, below 100. 95 was the number they've used previously. 109 even, 109.10, sell 1. And then we'll pick up the 109.30 to 40 for sell 2. Do like the short side of the market, and the reaction in the euro makes sense with the strength in the dollar and the interest rate bump yesterday. So this one is trading the fundamentals that we can see. And it always makes for easier trading, in my opinion. You just eliminate one of those the uncertainty, and like we have in treasuries and the E-mini. I mean, the E-mini continues to defy gravity, and that's just the central banking operation. Okay, crude should be lower based on the glut and weakening circumstances around the globe. 36.75, 37, sell one. Get through that. I don't think this single prints can be taken out, so I'd like to sell kind of 50% on that 37.50. So we'll make sell to 37.50 plus or minus. On the buy side, this is support. That's S1, 36 to the buy, to 36 and a quarter. Then 35 and a quarter, 35.50 for buy two. Okay, to the E-mini, let's go take a look at the daily bar chart and kind of get a big take on where we are, and we're in the top half of the trading range. We're right into this congestion area. This rally that broke the market started from 2095. We're through this low right here, so we've got this kind of little break in this 75 area as you come across 70, 75, 76. We've got that high right there. So resistance starts at 75 and maybe a little bit lower, 72.50. If we look at the F1 screen, you can see that 77 to 80 right here, this NM high. We've got volume up at 95, give or take. We've got volume most recent in the market's memory at 85. So we really have resistance at 75, 78, then at 88 to 96 based on this chart. And as long as we stay above 32, it'll be pretty easy to get to 94. So we still, when we come back and look at the chart, it's a 2100 plus, 2000 minus market right now. Case 72.50 is resistance. 75 would take us above that high. So sell one is going to be failure to take out 72.50, 75. Get through that, then it jumps up, and we've got a 78, we've got an 85, we got an 87, got a 95. It just kind of jumps, so we'll make the second sell 75 to 81, picking up this high volume area right there. Okay, the breakout in London came from 64, so they make us pay up in the morning. 63, 65 is buy one. Again, the easiest trade to see is failure to extend the overnight sessions range. London's low is at 59, so we'll make 55, 60 for buy two. And I think the best, you can see the breakout from 53, so this 55, 53, 55 area is probably our best little support band. And again, we've got this, it's very, very difficult. I mean, when you look at the fundamentals and everything else, the Fed's desire for the stock market to be higher is probably the biggest input, biggest reason to buy stocks. Doesn't fit with revenues does not fit with a slower world economy. What the Fed said, they're really superb forecasts. And the Fed hasn't made one economic forecast over the last 6 or 7 years. There's usually a zero hedge article out there. Well, the Fed's been wrong 50 times in a row or 52 times in a row. What will their forecast? Will their forecast be correct this time? Probably won't be. And so what they're forecasting is economic growth in 2016, and an accelerating economic growth. So we will see. Today's going to take a bit to get stuff up and posted. I'm going to get busy on that. I will be with you as soon as possible.